Hello traders, Gary Wagner here. Approximately 1:30 in Honolulu, 6:30 in New York. It is Thursday, 4th day of March 2021, and this is the daily report for gold and silver. Half empty or half full. Whether we're pessimistic or optimism is really the key right now to current sell-off in the precious metals markets. While it is realistic to believe that there could be more downside in both gold, silver, platinum, and palladium, the truth of the matter is it presents an incredible opportunity at the point these precious metals hit the bottom. When will that be? We won't really be able to determine that on a technical basis until we see a bounce or a V formation. But realize with pessimism comes optimism. I hope you enjoy today's show. Today, the words of Chairman Jerome Powell of the Federal Reserve did not do enough to soothe market sentiment. The result was that we saw a dramatic rise in yields in U.S. Treasury notes, taking them past 1.5%. We saw a tremendous spike in the U.S. dollar, gaining about 0.8%. And the reciprocal move lower in the precious metals complex. Gold broke solidly through $1,700 per ounce and currently is fixed down almost $21 at $1,694.90. This first chart that we're going to look at on today's show is a daily chart, but it is in Henkin Ashi or Japanese average format. The reason that I am pulling this up as our first chart is we talked about body size yesterday. We talked about the fact that we saw a diminishing in body size in yesterday's candle and the return of these upper wicks. The absence of them is so critical when viewing a Henkin Ashi because what it says is that at no point during the trading session did price action take current pricing above yesterday's midpoint. And clearly today we can see that we have that pure absence of an upper wick and a definite increase in terms of body size. What that tells me is that the selling probably will continue at least throughout the remainder of the week, which is only one day. It's really going to come down to tomorrow's jobs report number, and that will determine where the precious metals markets go from here. Now, we are looking at a daily candlestick chart of gold, this time in standard Japanese candlestick format. We can easily see that the lows achieved yesterday that came in at 1699.40, I believe, were definitely taken out, and not only taken out, but remained there on a closing basis with the market closing well below 1700. The other thing that we've been talking about over the last couple of weeks is the alignment of the three moving averages most followed by market technicians. And it's obvious to see that we've gotten a true bearish alignment, as we spoke about yesterday, with the longest term moving average on top, followed by the 100-day moving average a second, which has the 50-day or the shortest term moving average on the bottom. And that certainly doesn't beckon higher pricing, but realize these are lagging indicators and they will continue to look this way until the market truly reverses. And so a reversal will not be first seen in the moving averages. They will be seen, of course, in price action. One thing that is quite interesting is when we look at the current low in the market, which matches up precisely with the 38.2% Fibonacci retracement level. You can see that. That is this green line right here. This is, again, another critical area. We talked about critical areas, first being the 50% retracement here. And we also mentioned at that time that if we effectively broke below this particular price point, it would be most likely that we would see the market drift anywhere between 1680 and 1700. We see exactly that occurring today. Today's low was 1687.60. We will maintain our neutral stance with no active trades due to the fact that we are currently neutral to bearish, and we'll shift that to just bearish on gold pricing, at least for the immediate future. However, realize that within any kind of hard sell-off, as we spoke about, in our opening letter and our opening statement can provide opportunity, because any asset with intrinsic value that is in a corrective mode at some point will find support, will become oversold, and will present a great opportunity for the buy side. Silver dropped by almost 4 percentage points today, giving up just over $1 and currently fixed at $25.37. We are looking at a daily candlestick chart of silver futures. A couple of things are absolutely noteworthy. One, we talked about the fact yesterday that silver clearly broke below the 50-day moving average. We can say now the same for the 100-day moving average. I draw your attention to this red line. That is what I've held my line in the sand in terms of a critical level that needs to be held if we're not going to see silver prices retrace a full 78% from the recent highs, just above $30. That comes in roughly at $25.15. We are at $25.37, and the low today, $25.08. We can see that right here. We definitely breached that level and then recovered well above that level, but I'm not clear that the selling has terminated at this point. That's a key level to watch. However, as you can see, I have just added the 70% retracement because obviously if it does not hold the 61.8% level, we could see a drift as low as 2380. And remember, this is a short data set simply running from 22 to 30, but we could see a retracement go as low as $24 to $23.80. Palladium lost about 1.25%, a total of $29.40, currently fixed at $2,325, but it was platinum that sustained the greatest drawdown in trading today, losing $51.40. That's a net drop of 4.35%, with platinum futures currently fixed at $1,130.40. And traders, as a final comment, I cannot underscore the following point loudly enough. The one thing we have to remember is when markets are in a free fall, they will at some point, if they have intrinsic value still behind them, find support, hit a bottom, and then bounce off of that bottom to higher pricing. I believe that that opportunity will present itself in the near future. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review following the release of tomorrow's jobs report. Have a great day. Bye-bye.